Okay, hello everybody. It is April 3rd, and last night we got guidance from the SBA and Treasury on revising some of the rules regarding the PPP program. This is the Payroll Protection Loan Program, and I want to get you guys this information as fast as possible because it's going to change the way, primarily just the way that you calculate it. So let me give the big picture first, and then we're going to dive into the rules and the things that changed. The big picture is independent contractors are out for the calculation on how much you can get in terms of the PPP loan. So you can't use independent contractor payments to figure out the eligible amount of a loan amount that you can get. That's the number one change from this. I'm going to go through the other ones, but that is the number one biggest change. So let's go through these things and let's talk about this because I will tell you that the other thing that they put in here that is probably the most important thing to take away is they said it's coming on a first come, first served basis. So it sounds like a lot of money in there, but it's not that much money. And you want to make sure on a first come, first served basis that, that you're in there first and that you're in there organized. So never been more important to have an organized set of documents that prove what's going on in there. Because the third thing that they said in this that's very important is that they're going to hold the banks harmless. This is great because a lot of banks were starting to hesitate and say, well, I don't know if I want to participate in this. They said, no, we're going to hold you harmless, but you have to double check the facts that somebody puts in there. So if they say something, you have to have a source doc that proves it. This means you've got to be organized. You have to have your documents together in one place so that when you fill out the SBA's application, which is a form, a form 2483, that when you fill out that form, that's only a 2-page form. You have to have all the backup documentation to prove the stuff that you put in that form is accurate. That's where our organizer comes in. You can use that if you want. If you don't do it yourself, that's great. We're going to put a link at the end of this to the organizer so that you can get there. I'm also going to include a link to the entire SBA document so you can read this for yourself and interpret it the way you feel like is appropriate. All right, let's go through this bill these new rules sort of step by step. First and foremost, the thing that they say is this is final but not final. So we can expect more guidance from the SBA on these rules. That doesn't mean to slow down. Again, they're saying first come, first serve. I'm telling you, you got to get in there fast and accurately. Next, the lenders, like I said, are held harmless for borrowers' failure to comply with the criteria. That's great because it frees up the banks. Third, eligibility to participate in this PPP program really hasn't changed. It's less than 500 employees or qualified as a small business under your NAICS code 72, or you're a nonprofit, or you're a sole prop, or now you're an independent contractor. Because what they've said is, if you're an independent contractor, you need to file individually. The company cannot file on your behalf. So that's where they changed the rules on that. There are ineligible activities. As before, federally illegal activities, read in this cannabis, is not eligible to participate. If you employ household employees, this was a good clarification because it was a chance for fraud, frankly. 20% owner that's been incarcerated or committed a felony or convicted of a felony, in the last 5 years, you're ineligible. This is a big one. If you have an existing SBA loan that you're delinquent on, you are now ineligible to participate in this program. They didn't change the max borrowing capacity. You can still only borrow up to $10 million, but they did clarify the calculation on how you calculate the borrowing base, how you calculate how much money you're eligible to get from the banks and from the SBA on this. So I'm going to walk through this as best I can and with a couple different scenarios. What they said is that you are eligible you have to cap compensation or wages at $100,000. So let's talk about what's in there. In there is salary, other wages, and commissions, bonuses, things like that. That all has to cap at $100,000. But on top of that, you can put in employer-paid insurance premiums, employer-paid benefits, payroll taxes at the state level, not the federal, but at the state level. You can also put severance packages in there that you've paid to employees in the last year. You can also put in things that you've paid for pensions, 401k matches, contributions, things like that. Things that you've paid for family medical leave, sick leave. All of the other employee benefits can be added to this. So the $100,000 cap isn't truly a $100,000 cap. It's a $100,000 cap on salary, wages, commissions, bonuses, things like that. You could have as much as $120,000, $130,000 per employee based on benefits that you add to the top of that. So that's good clarification because it means that you can probably increase the amount that you'd have as a loan. So that's good. The other thing that they said is this: when you get the money, you're going to get the money. It's the 8 weeks time frame is still there under which you need to use the money, and you can only use it for eligible activities. And they really clarified this down and narrowed it down. What they said is you have to use 75% of the money that you get for payroll. Payroll defined as all those things I just talked about. 75% of it has to go to payroll. So that means that if you don't use 75% of the payroll, you actually have to give it back. Again, it doesn't say it that clearly, but that is my interpretation of the way this would work. And I think that's a conservative way to look at it. So we're going to break this loan amount. Let's say you get a $100,000 loan. We're going to break it into 3 parts. The first part is, I'm going to use $75,000 of that for payroll. Let's say you only use $60,000 for payroll. I would recommend giving the $15,000 back immediately, because it's non-forgivable, and worse, they're hinting at, if you keep it and you haven't used that 75% for payroll, they might call it fraud. So be very, very careful. You get a $100,000 loan, you've got to use at least $75,000 of that for payroll costs. Anything less than that, I would immediately give back. Second piece of the loan, you get a $100,000 loan. You've taken that $60,000, you've given $15,000 back. The other part you can still use for the same eligibility you could before. So rent, mortgage interest if you own your building, utilities, CAM charges, transportation for your facilities. All those sort of facilities costs can be used in that 25% range. If you use all of it, great. 100% of your loan is forgiven. Between the 75 and the 25, you're good. If, however, you use less than 25% on those things, let's say you use $20,000 of the remaining $25,000 that's left on your loan, the $5,000 that's left is your unforgivable portion. That portion is subject to new terms. Go through this one more time so we're on the same page. You get a $100,000 loan. $75,000 has to go to payroll costs. If you hit that number, great. Anything less than that, you should give it back. Secondarily, you've got $25,000, 25% that can go to your occupancy costs, your rent, utilities, all those things that I was just talking about. If you only use $20,000 of that, then $5,000 remaining becomes the non-forgivable loan component of it. And that has brand new terms. Before, it said you could pay it back over 10 years at less than 4%. Now, what they're saying is it's a 2-year loan at 1% with 6 months automatically deferred payments of principal and interest, and up to a year of principal and interest deferral with certain acceptance, and they haven't clarified what that is. And in fact, they said that the SBA is going to give further guidance on this loan forgiveness issue as we get going into this. So right now they're saying 75% has to be used for payroll, 25% can be used for the other things, and of that 25%, a certain portion of that is not going to be forgivable if you don't use all of it. That's a big change from where we were before on the back end of this. What does that mean for you? What does that mean for you to actually tactically do to make sure you're okay? If, again, I'm going to make the same recommendation I made before. As soon as I get this money, I'm setting it aside in a separate account so that I can account for where every dollar goes, and I can show exactly where I spent it. And I'm going to spend it only on those eligible things so that everybody knows, the bank knows, when I give it back to them at the end of the 8 weeks, that I've used it for the exact appropriate amounts, appropriate uses. So segregate it out and make sure you keep good accounting. I can't, stress enough that your documentation, your accounting in this is going to dictate whether or not you give a portion or not forgiven. Last thing to think about here is if you don't do this right, okay? If you don't do this right, the government has instilled some pretty harsh penalties because they're going to take it as fraud. And what they're going to say is you have a payback amount, right? So let's assume, again, using that $100,000 loans, let's assume you take $60,000 for payroll. You give $15,000 back. You use $10,000 for the other costs. You have a $15,000 loan now. First of all, that loan is that payback loan on the 2 years with 1% interest. That's 6 months deferral of principal and interest. But at the end of that, you still have to pay it back. And there is personal recourse for the non-forgivable component. If you don't pay it back, or if you don't use 75%, they are saying that this is going to be termed fraud or could be seen as fraud. And there's a minimum $250,000 fine, maximum $1 million fine, and a minimum of 5 years in prison and a maximum of 30 years in prison. This isn't anything that anyone wants to be anywhere close to. So make sure you're documenting your stuff. Make sure you have backup and do it right. If you have any questions about this stuff, understand that we're here to help. We're here to do as much as we can at TGG. I've got, well, at the end of this, we've got our email address, info@tgg-accounting.com. We have our organizer that will help make sure that you have your source documents for your bank so they can quickly approve your loan. Feel free to use that if you need to. Also, feel free to just reach out with any questions, comments, or whatever it is that you have on your mind, because this isn't the least complicated thing out there. It's pretty complicated, and it's important that you follow it to the letter of the law so that we're keeping everybody safe. Whew, lots of fun stuff. We hope you guys are enjoying these webinars and getting a lot out of them. We are here to really support this small business community. And again, I want to thank my entire team and our entire small business community that's getting the word out on this. If you've got any questions, any comments, again, email us at info@tgg-accounting.com. We're going to include a link to the organizer in here, a link to past webinars, and the document that you can read direct from the SBA so that you can see exactly what I'm talking about here if you want to do your own research. Thank you again, and good luck out there. It's a wild, woolly world. We'll see you soon.